So if you've clicked on this video, you probably have been struggling and you're looking for that one indicator, that one strategy, or that one tool that is going to make you a consistently profitable trader. The problem is most places on the internet are trying to sell you something or give you some kind of retail nonsense that simply does not work. The reality is the only leading indicator that you need or should be looking at is the candlesticks, the price. The price is the best indicator there is, and I'm going to teach you how to use price action and how to use price in reoccurring trading setups in this video. So do me a favor, hit the like button, subscribe if you haven't already, and enjoy the video. Before I even get started, I just want to go over a couple of things. The link to this slideshow, so all the information that I'll be going over, is in the description below. You can click on it, you can follow along, you can print it off, do whatever you'd like with it. Just want to let you know it's down there. Additionally, the Pips to Profit indicator, it's a free indicator, and it's all of the tools that I use. You just go to Discord, that's also free. You just join the channel, you can go to the indicators channel, click on the pin tab, and you can click on the Pips to Profit link. It'll take you to TradingView. You favorite it, add it to your chart, and then you can adjust the settings however you would like. Additionally, I have a lot of questions about my high and low indicator, my previous day's high and low, previous week, etc. It's just called previous week or previous day high and low, and then you just change the settings to circles so that it will look like mine. Now, before I get into the core concept of this video, I want to start off with kind of a smaller concept so that way the rest of the video can make sense. What is a peak formation? Some of you may or may not have heard that terminology. A peak formation is simply a high or low that price has moved away from that area aggressively, and that's going to show up in the form of an M, a W, an A top, or a V bottom. It can also show up as a Batman, which will kind of look like the M, or it could look like a half Batman, and I'm going to show you an example of that here in a second. To put it simply, peak formations are just swing highs and swing lows, but they're very well defined. As promised, here are some examples of peak formations. These are the V bottom, A tops, where they have made a swing level. You can see that there was a low, and then they made a lower low, giving us a swing level, and then price moved away from that area aggressively. So this is a V bottom, and then the same exact thing happened up here, giving us an A top. All right, so peak formation low, peak formation high, those are examples of peak formations. The next one is the double bottom, also known as a W. It just looks like a W, all right, and then price comes down, makes the W, moves away aggressively. That is an example of a peak formation. If you were to flip this over, you would just get an M. It would just look like an M, and it would look exactly like this, just upside down. Over here is the half Batman. The half Batman, if I were to dissect the pattern, is an ear. Here's like the little head, the nose, and it just looks like Batman, kind of a side profile. Let's get into the core concept of this video. It's all going to be about the day zero trading setup. This is a reoccurring setup. It shows up pretty much every single week in some form or fashion, at least on one pair. It could be a Monday, Tuesday, Wednesday. It could be a Wednesday, Thursday, Friday. It could even be a Tuesday, Wednesday, Thursday. It doesn't matter what 3 days or how it sets up. I'm going to show you the different scenarios and the different characteristics of the setup so you can recognize it and go through it on your own. This is a specific chart pattern. It has nothing to do with a 3-day cycle. And I'll say that again. Day zero has nothing to do with the 3-day cycle. Day zero is simply a chart pattern. It shows up and it gives you certain characteristics and certain signals that will tell you that the pattern has formed, and I'm going to show you those right now. It's a reoccurring market pattern that is a market mover. It will usually cause a large-scale move on the following day. Let's get into some of the characteristics for the day zero, what to look for, and then I will show you how to trade it. The day zero is a 2 to 3 day setup, and what I mean by that is it takes 2 to 3 days before you actually take the trade. There's going to be 2 days of setup and then 1 day of trade. The day of trade is just the day that you actually take the trade, okay? It's going to have a dump or a pump day prior to the day zero setting up. Day zero being the actual pattern. Day zero will spike high and low very violently, clearing the board. It's going to trigger breakout traders into the market in both directions and then go into consolidation. Kind of like this little heartbeat monitor pattern that I have over here. Peak formations may form over the course of 2 days. And I'm going to show you exactly what I mean by that. This is not that pattern. This is actually revised information from statements that I've made in previous videos. Because from what I have found, day 0, the pattern can actually show and kind of form over the course of 2 days. And then you take the trade on the 3rd day. So it's still a 3-day setup. It still takes 2 to 3 days to set up. But the peak formations will usually show up as a false breakout or a failed breakout at the high of the week, and then a failed breakout at the low of the week, or of course flip-flop that around over the course of 2 days. And of course I'm going to show you some picture examples. The day that is to be traded will present as either a parabolic long trade, a parabolic trend trade, or a short or long squeeze. And I actually have the videos linked later on in the slideshow to both of these kind of setups. So that way, if you don't know how to trade these, or you don't know what I'm talking about, you can actually go and visit those, and you can download those slideshows as well, and they will describe these to you, and it's long form content, a video of me describing how to trade them. We'll have 2 to 3 days of breakout traders in the market. What I mean by this is, if you can see this previous day's low line down here, this little gray dotted line, where you have a market coming down 2 to 3 days, breaking out of that level, and then forming this pattern. So what that does is it has breakout traders in the market, and the market's consistently going down, which means that the stops for those people trading those breakouts is going to be at the other end of that range. And that is why we look for this pattern, because it can form and lead to large moves in the opposite direction, stopping out people who have been going short if it's been going down, or long if it's been going up. Before I continue, I just wanted to give you at least a couple of examples of the actual pattern and what it looks like, so that way you can visualize it as I'm going through the rest of this video. On this screen right here, you can see that I have market structure labeled, because these setups, and really all of the setups that I talk about on this channel, the overall context of the market is extremely, extremely important, okay? If you just zoom in and only look at one day, you're setting yourself up to fail. I've noted on this chart that overall, the market has been going up. It's been making higher highs and higher lows over the course of a long period of time. And I just drew this trend line here. I don't trade trend lines, but it's a reference. It's something to look at and to kind of visualize the fact that, yes, the market has been going up in one direction. Over here, I do have labeled that we made a higher high and that this was an inside day, which gives me a lot of valuable information. On this day over here, Monday, Tuesday, Monday is the opening range. And then Tuesday has now spiked both sides of the opening range. The opening range happened to be an inside day for this week. When they spiked both sides of the range, that created a day 0 scenario. They've spiked both sides of the previous day's high and the previous day's low and gone into consolidation. And then how the following day begins to trade is what is so important, because market structure will tell you everything that you need to know. Breakout, pullback, continuation. We're making higher highs, higher lows, and continuing the trend. The trend is already up. We have a parabolic style of setup in play. No reason to go short. The only way that I can go is long. Timing of day is extremely important. This is in the London session, and this pullback leading into where it went vertical was the New York session. I also have labeled up here that if I were to take a range expansion tool, which is basically just a Fibonacci tool, and I've changed the settings to 100% expansions. Also, you can find those settings in the Discord, in the resources section, and I think in the indicators as well. If I were to take that tool and I were to put it from here down to here and drag it, it would put 100% expansions of that range up. And you can see that everything in the market is measured and timed, and it is perfectly one full expansion of that range. Within these trading setups, that is how I find my profit targets in the areas that I believe that the market can get to for these setups if we get a large scale breakout. Also, I've labeled that this is a Monday, Tuesday, Wednesday template, which is a little bit about, kind of what I said earlier when I started talking about this slide. Monday, inside day, opening range. Tuesday, initial balance. They spiked both sides of the range and then went into consolidation. Day 0 on a Tuesday. Looking for parabolic trend continuation on the Wednesday. This is another day 0 example, except in the short direction. And also, it took a little bit longer than 2 to 3 days to set up. We had a very large pump day that led into a first red day. However, on the following day, that first red day did not really eventuate. It did have a move down, which broke down, but the pump began all the way down here from last Friday. Pumped up, you can notice the push out of this consolidated area right here. This is the previous day's high. They pushed out once, twice, 3 times, and then they broke structure to the downside. They've now made a lower low. They've continued to make lower lows, which means the market could continue to go down. That is a solid assumption. Within this high and this low, they have now broke structure to the upside, and they've spiked to the downside. They spiked the previous day's high, and they spiked the previous day's low. They just so happen to break structure to the downside last, which can mean something, maybe not. Really, with this pattern, I really need to see on the following day what happens. What happens on the following day that will lead me to believe that this market will go down? They spike the high of the day, and then it breaks down in London, or after London in the gap time. They break structure of a minor swing low and pull back, leading into the New York session. That's the trade. Break down, pull back. That is a long squeeze setup. Breaking structure, lower low, pull back. That's the lower high formation. That gives you a long squeeze setup. Additionally, I have the peak formation high labeled A top, peak formation low, V bottom, and I also have a peak formation in M within the larger structure right here, and also the 1, 2, 3 on the 15-minute chart into the New York session after making a lower low. If I were to zoom in on this, what I'm talking about, 1, 2, 3, that is 3 15-minute candles up and an engulfing bearish candle down leading into the New York session. I'll say it until I'm blue in the face. Market structure, context of the market, considerations for day 0 trade setup. Okay, and I put it in all caps because obviously it's pretty important because I keep saying it over and over. Market structure is very important. With these setups and with every other setup that I take, you have to pay attention to which direction the market is currently going. And by the way I define currently going is, where did they break to last? Was there a break of structure? Are we currently in a trend? Or have we had a break in structure and the trend could be flipping around? So if we've been going down and we get a break to the upside, so they made a higher high, I would be looking for a higher low to form. If we've been going up and they make a lower low, I would be looking for a lower high to form. You have to watch the internal structure and the minor swings on the day of the actual trade. So if the prior day you have that day 0 pattern, the little heartbeat pattern that I've showed you, on the day itself, you have to pay attention to what has the structure inside of that heartbeat pattern done. So you're going to have that check mark high, check mark low, and then consolidation in the middle. You need to watch those little itty bitty swings and watch and see what kind of structure is forming. Are we having some kind of breakout pullback, explosive move to the downside scenario? Are we forming a little channel? How is that pattern forming? Only 2 presentations of price will occur on the day that you're actually trying to take your trade. It's either going to be a short squeeze or a long squeeze. I categorize those as one. That is a higher high, higher low scenario, or a lower low, lower high scenario. Or price will present as a parabolic trend trade. That is going to be that parabolic channel, peak formation high, peak formation low, consolidation, and a trend channel. And again, I'm going to give you the links to both of these styles so that you know exactly what I'm talking about. The market is not a cookie cutter perfect. Every single time it'll look exactly the same. And that is why I have been preaching market structure and context, because you need to understand what has happened prior to you looking at that day 0 so you can try to have more information on the board and understand what's happening. Context of the market, detrimental to success. And I have listed out a few questions you can ask yourself. Signal days, first red day, first green day, inside day, 3 days of breakout traders. Market structure, signal days. I just said that up here, but what has happened in relation to the opening range for the week? What has happened in relation to the Asian range, which is the opening range for the day? How many levels of rise or fall has there been within the week and within the day? Because that could signal a potential reversal And again, that is more information for you to go off of if you get one of these day zero setups within the week. Earlier in the video, I told you that sometimes these peak formations can form over the course of 2 days, and they won't always just give you a really solid check mark pattern on the day itself. In this case, it's kind of happened in both scenarios, except the day zero day did not spike all the way to the previous day's high. So I'm going to show you this scenario. On Tuesday, we have a peak formation high that then leads into a peak formation low on Wednesday. Within this 2-day structure, we have a peak formation high, peak formation low on Wednesday itself. This high from Tuesday, you can project that line across. And then I told you in the previous slide, watch the internal structure on the day itself that you look to take the trade. This is a 3-day setup. Peak formation high, peak formation low. On the 3rd day, you're looking to take the trade. You have an end of day consolidation, so structure within a structure within a structure. All right, we have a high and a low, so this would form a large structure. And then you have a high and a low, which forms a smaller structure. And then you have a low and a high, creating that really tight consolidated rectangle on the day itself. In Asia, they break out of that smaller structure and they start making higher highs. This is a break of structure. They've made a higher high on the day itself and a 1, 2, 3 back down into that low and an engulfment right before the London session opened. You have a little inside bar before an explosive move. On the 1-minute chart, there would have been a great entry. This is what I would consider a short squeeze setup. The reason is they've made a higher high. I'm looking for 3 pushes back down and a short squeeze signature to get me into the market on the 1-minute chart. Timing is important. The fact that they are doing this right before the session begins is a really great confluence. The pattern itself, this peak formation high, peak formation low, you're looking to get back up to where the dump began. This is where the dump began. This is also the high. So you're looking to get that move back up at a minimum to this high. And if this was to break out and continue higher, you can do that range expansion tool that I showed you earlier on in the video. You can do it from the body to body, candle body to candle body, and it will give you expansions of that range. You could also be conservative and just use that body, that high and that low, and that will also give you targets. Going through this over here, a lot of times this will turn into a failed breakout at the high and low of the week on a back-to-back day. So like this day, they broke out and failed, and then they broke out and failed. Notice the previous day's low projected across, they broke out and failed. And if you were looking at Monday, again, they broke out and failed. So this was a breakout, a failed breakout at the high of the week, a failed breakout at the low of the week, and then consolidation in the middle. And that's what this first bullet point is talking about. I will ignore the 3-day cycle at this point. So if you've looked into any of my 3-day cycle videos, or if you've heard about the 3-day cycle, I will ignore these failed breakouts and I will stop focusing on the 3-day cycle at this point, and I will just focus on the pattern itself. Peaks will still be sharp. By sharp, I mean very well defined. You can very easily see these peaks. Go back. You can very easily see that these are peaks and they still have a kind of a heartbeat pattern signature to them. More examples, more pictures. Characteristics example, and I have lots of labels. So let's take a look. Dump day, we have a dump. Then we have a break in structure to the upside, well-defined peaks. They spike the low, the previous day's low, and they spike the high right here. And then they pull back. They work down into the low. On the day itself, the day that you're really looking to take the trade, they have a break in structure to the upside. So now we're making higher highs and higher lows. We've made a higher high, which means I need 3 pushes back down. 1, 2, 3, engulfment. There's your trade. Day 0, peak formation low, peak formation high, consolidation in the middle. Parabolic trend trade / parabolic short squeeze based off of higher high, 3 pushes back into the low, explosive move. That is a criteria-based trade setup. That is not the market went up from here style of trade setup. It is reoccurring, and that is how looking at it in hindsight can help you to look at it into the future. So I've identified a day 0. I know all the characteristics, but how on earth do I actually trade the setup? Where do I get in? How do I get in? And I told you earlier, the only two options, the only two presentations of price on the day that I actually get into the market are going to be parabolic trend trade or a short or a long squeeze, depending on which direction you're going. And I also told you that I would give you the links to those videos so they're easy to find, and you will have all of the information that you need to identify and how to trade each one of these styles. Okay, so please go watch those videos. If you want to take a break from this video before continuing, go figure out what these are. Maybe rewind this video so that the context and the understanding will make a little bit more sense, or just continue. But the criteria remains the same for my entries. Identify the day zero setup. Wait for a break in structure on the 15-minute chart in the intended direction, minor or major structure. Just like I said, market structure, huge. Look for 3 pushes on the 15-minute chart or a parabolic channel, or sometimes it will be both. Get to the 1-minute chart for those entries on the next slide. Also, I have a link to my 1-minute entries video. Everything to do with market structure, everything to do with 1-minute chart, and removing all the noise. If you think the 1-minute chart is noisy, I promise you it isn't. You just don't know how to identify the swings. Here's a video on how you can fix that, and it should help you. Entries on the 1-minute chart, simplified. Once you narrow it down, and once you've done it 100 times, or you've at least seen it 100 times, it becomes reoccurring. The market can only do so many things. This is a really great concept, and I haven't really shared this in any of my videos yet. Different methods that the market uses to trap people, and certain psychological behaviors that the market uses to get people to do something and then rip it away from them. And I can display it with simple lines and maybe a few different explanations here. So within a parabolic trend trade, make sure you have identified your 15-minute channel first. Then get down to your 1-minute chart, and you can have maybe the chart side by side so that you can see both things taking place. I want to see people getting dragged in a direction. Now, of course, I'm going to explain what that means with this picture. I want to see behavior that tells me people are stuck trying to counter trend a parabolic move, and it just has not gone vertical yet. After identifying this behavior, I want to get in as early as possible within the channel before it goes vertical. I want to be in before it goes vertical. I want to position myself and have added in before the market explodes straight up. Now, before I get into short and long squeeze, I want to show you some evidence that you can find that people are stuck. And this doesn't only work for parabolic channels, but it is how I use it to identify these channels. So, early warning signs. And I've kind of ruined it because there's a bunch of candlesticks up here. But this is my early warning sign. This was a bunch of little bull candles going up, for context, because I've put this box here. My fault. I'm sorry. They engulf, which means the market should go down. There was a 1, 2, 3 over here. The market should go down from this point. There should be no more pullback. There should be no more fiddling around. If it wants to go down, it should go. Instead, they start trickling some candles back up. All right. I love seeing this pattern. I love seeing when I've already identified a parabolic channel, or I have an idea of a day zero, and I see them start to drag people. This is an impulse candle. This is getting people to short. People shorted that candle. I guarantee it. And then it starts trickling back up. Now, that's an early warning sign. I want to start to identify some behaviors. These are impulse candles. Getting people to short, getting people to short, getting people to short. Look at the close of these candles. All right. They are getting people to short back down. The close of these candles are important because people sell the close of a candle. They think, okay, that's a strong looking candle. I'm going to sell. And on the next candle, I expect it to go lower. So when it doesn't go lower, and it doesn't go lower, and it does not go lower, they rip it away in one candle. And if you look at the closing prices of all of these bear candles, they are now stuck. And the market never comes back to those areas. Goes up, comes back down with some nice little impulse candles, little bear candles down. One push down, 2, 3. And in one candle, this candle alone, they've trapped that person, that person, that person, and that person if you look at all the closing price. And in 2 candles, every single person, this one, that one, that one, and all of these candles here are stuck. If anybody sold the close of any of these candles in 1 candle, they have trapped all of them. And you can see people continue to get dragged over and over again. 1, 2, 3, engulfment, closing price. In 1 candle, they have dragged all those people long. Same exact behavior over and over again. Short squeeze and long squeeze. Waiting for that break-in structure on the 1-minute chart. Because remember, I've already identified a 15-minute break-in structure. They've either made a higher high or they've made a lower low. And I'm trying to identify the pullback using the 3-push method on the 15-minute chart. But I'm on the 1-minute chart and I'm waiting. I'm just waiting for the pump and dump. So they're making higher highs and higher lows on the 1-minute chart, or they're making lower lows and lower highs. And I'm waiting for them to change direction. And remember how I identify that change in direction is if they're making lower lows, I'm waiting for them to make a higher high and then push back down 3 more times on the 1-minute chart, give me a chart pattern and engulf. All those things I just said are right here. Wait for 3 pushes back down, wait for M, W, triple top, triple bottom, head and shoulders, inverse head and shoulders, and then I'm waiting for a candlestick, engulfing candlestick pattern, and use time to find where people are trapped, confirm trade, add to position, and manage stop loss. I've added this slide in here. This is a slide from one of my previous videos, and it's my trading process simplified. I've broken it down into steps. Step 1, identify my trade setup. Okay, we've done that this entire video. Day 0, how is it going to present? Short, long squeeze, or parabolic or capitulation trend trades. Step 2. Step 3, market structure. I've been harping on it this entire video. Which way are we currently going on the 15-minute time frame? Are we still going up or are we still going down based on break-in structures? And then step 4, 3 pushes. If we have a break-in structure, that's the first mouse triggered in. I need them to jam back down into the low or jam back up into the high on the 15-minute chart. And I'm on the 1-minute chart, step 5, looking for steps 2 through 4 on the 1-minute chart, and I'm initiating my entry criteria. What I'm looking for, what I'm talking about, steps 2 through 4, is presentation. I'm looking for everything that I'm looking for on the 15-minute chart. I'm now looking for it on the 1-minute chart to basically repeat because markets are fractal. Additionally, before I skip this slide, I want to tell you that 3-day cycle explanation for anybody who has questions about the 3-day cycle. Here is the link to that YouTube video. It's my newest 3-day cycle explanation. It's very in detailed, so please go check that out. Ladies and gentlemen, I really do hope you've enjoyed this video. If you have, please do me a favor, hit that like button. If you haven't already, subscribe to the channel. You have a wonderful day.